We all know Leonardo DiCaprio from the great film Titanic, and in 2013 he was in this film called The Wolf of Wall Street. So in this episode we are discussing this film called Wolf of Wall Street, and I have invited Mr. Deepanshu Bhandari. So Deepanshu sir is the financial anchor in Z Business, and in this episode, Deepanshu sir and I will be sharing both of our experience in watching this great film. So do check it out. This film is currently streaming on Amazon Prime Video, and watch this spoiler-filled discussion over here. Hi, Deepanshu. So, welcome back to my podcast, which is Spoiler Alert with me, Cinephile Sanket. So, sir, in this episode, we are discussing one of the famous financial films, which is called The Wolf of Wall Street, which is directed by Martin Scorsese, which stars Leonardo DiCaprio, Jonah Hill, and Margot Robbie. So, sir, first of all, would you introduce this great film, sir?
Hi, Sanket, and thanks for having me back. Always a pleasure to speak to you about movies. Wolf of Wall Street, great film. It takes on an era, I would say, not just a personality. Of course, it is based around the personality of Jordan Belfort, but more than that, it takes on an era of Wall Street, which really sort of defined American capitalism and which really has sort of defined the kind of euphoria that one experiences in the stock market, especially when things are going well. I mean, uh, he started with the crash of 87, which was his sort of initiation into the world of broking. And from there, we've seen that American markets entered into a cycle of hyper growth. And he was part of that. And so, really, this movie is as much about Jordan Belfort and the personality that Jordan Belfort is, as it is about American markets, equity markets, the kind of boom that we had in the 90s that sort of attracted a lot of attention into the stock markets. And of course, the excesses of the stock market that comes with that. So this personality, and through this personality and people associated with him, we also get a window into how things used to be for the markets back when it went through a phase of hyper growth.
But so I believe that you have, I may have I think you have watched this film back in 2013. Yeah, I believe that you may have watched this film back in 2013. So when you watched this film, what was your experience back then? Like, what did you felt about this film? And after that, like watching, I think you may have watched this multiple times, I believe.
Of course,
Yeah, so when
it
you
is
watch
the
this multiple times, and when you watch this just before recording this podcast, what was your experience, like different experience? Like, tell me all about it, sir.
good question. So, of course, the first time that you watch a movie, and especially when you watch a movie like this, even though I was part of the markets then as well, didn't know much about the personality. So it was really a window into this kind of a personality. And you hear about characters like these. I mean, India has also had a lot of characters like these in the stock market. But really to kind of get to know the
Making a name for
excesses that they
ourselves.
did, how they got away with it for a long time, how then they built
Nobody
up that
knows if the
fear
stock is going to
that
go up,
went
down,
away and
sideways, or in
built up that
circles.
feeling
You know
of
what Fugazi is?
invincibility.
Fugazi.
Sort
It's
of, it was
fake.
very interesting. It was great to kind of learn about these things and understand how they got into it and how they built on a relatively simpler idea. I mean, penny stocks, they've existed then, they exist now. It was an unregulated market then, it's a little more regulated market now. But of course, there is so much that happens over there that is missed by the big money, right? And you have an opportunity. There's a theory in economics called fortune at the bottom of the pyramid, and in the stock market, these penny stocks would sort of represent that fortune at the bottom of the pyramid that almost everyone overlooks, rightfully so, because it's such an unregulated area and there's so many shady dealings that go on over there. So it was very interesting to kind of come across something like this, to come across the character of Jordan Belfort, to kind of get a sense of what he did, the excesses that they had, and the way they lived, and how they blew that money. And that one line where he said, the way I looked at it, their money was better in my pockets because I knew how to spend it better than they did, right? So you're really duping out these small guys, people who maybe not a hand to mouth existence, but definitely not anything much better than that, and they're sort of living that life out. and you're taking away their money, and you have no qualms about it, no guilt about it. In fact, you're happy you're doing it because you're like, what is that guy going to do with this money anyway? I'm the one who's going to spend it better. So it was kind of interesting to come across that perspective when I saw the film. And again, as you revisit it, more and more layers keep getting added to it. So that is kind of a good thing. There's a lot of things that you notice the second time or the third time that you watch it that you possibly may have missed out in the first time around.
Oh, actually, this happened to me as well. Like, I watched this film just like I think in 2015,
Right.
and I didn't like it. Like, I actually first of all didn't understand the story as well. Like, not just the financial aspect of it, but the story as well. Like, I don't know. Like, I wasn't uh, watching many regularly the Hollywood films. I wasn't watching Hollywood films very regularly. So like I just watched for the sake of it. I just watched the half of film. Then I actually I craved Hollywood films. I don't know how, but like I just was watching Hollywood films just every day. So then I got to know that okay, Leonardo DiCaprio, the star of Titanic, he is in this film, so I should watch it. And then I watched it again, but I couldn't understand it. Then I watched it somewhere in 2017, and then I got to know just the storyline of it, like how the film was, like the story was how he was doing just illegal things. But then now I got a better understanding of how like in general how the markets, the stock markets work. And we also spoke about the Big Short. You told me that how this housing market and although also the stock markets like kind of works. Then I watched this film, and then I actually got to know that he was actually dealing in the penny stocks area of the Wall Street. And I don't know, I wasn't like it felt kind of legal. I don't know like what was illegal in it, since he dealt with penny stocks. But since I know some people that are actually dealing with penny stocks, like they're actually talking about like we should invest in this penny stock. And I was like, when I was watching this film, I was like, is he doing a legal thing or not? Or my friends are actually betting in the illegal markets. I was like surprised and confused. So I was actually like I think surprised. But so for, if you can just elaborate, like why is this, like is the trading of penny stocks still illegal, or partly, like what is it like?
No, 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 no. No, 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 no. See, trading of penny stocks is not illegal, right? It's a different concept. I mean, obviously, back then it was largely unregulated. You need to understand what is regulated, what is not regulated. So when you list a company, when you when your company publicly starts trading on stock exchanges, there are a whole list of compliances that you need to follow. You need to have a certain kind of management. You need to have a board. Any big decision that you take needs to be disclosed to the exchanges. Every quarter, you need to declare your financial results. You need to have a set of auditors. Your results need to be audited, need to be re-audited. So there's a whole set of compliances that happens, right? You need to have a compliance officer. You need to have a company secretary. You need to have a chief financial officer. The role of the MD and the CEO needs to be defined. There's a large array of things that, once you become a publicly listed company, that you need to adhere to. Right? This happens on the main exchanges. But there is a provision for some of the smaller companies to also come to the markets and raise money. Now, the bigger guys aren't interested in funding these companies. So they come via a network of shady dealers, come via a network of operators, come via a network of people who know to possibly skirt the law, to work in the gray area, as it were. And everything that happens in these listed companies of penny stocks is largely unregulated, because there's so much attention on the big companies and the listed companies and the exchanges and everything that happens there. This part of the market is largely within the view of the law, but not so much attention is paid to it. Right now, over a period of time, that has obviously improved, including in India. I mean, our market regulator SEBI does a great job as far as the overall regulation of the market goes. But there are still companies, there are still stocks, there are still market operators that kind of know how to work in that gray area of the law, where you can just extend the envelope a little, go over the line, but not so much over that it starts getting attention towards you.
Like how
So
scam
he
happened.
started.
Scam 92.
No. Scam is different.
Different thing.
Scam is
Okay.
different.
Okay.
See, scam is not a penny stock thing.
Okay.
Scam is a money circulation thing,
Okay.
right? He didn't do anything that nobody else was doing, right? But he also did wrong that everyone else was doing. So he was no saint either. Neither were the other guys. He just did the same thing that they did, but he did it in a bigger way. He took that risk, and the fault rather that I would say was that he came in the public eye. Right. So when you become brash about it, when you become loud and vocal about it, then people will start looking into you. And there are multiple laws that you would be skirting, which again, in the case of Jordan Belfort, I mean, he doesn't come in the public eye until that Forbes article comes out, right? And calls him Wolf of Wall Street. And he's very angry about it because he's like, I want to throw out a picture of doing legitimate business while these guys are painting an illegitimate picture of me, even though what they were saying was true about him. And then he ran up with that. So once you have money, once you have fame, right, that feeling of invincibility starts coming in. And that's how his dealings came in the public eye, right? But to answer your question, he was dealing in an unregulated area of the market, right? So there, it's a gray area. You may be pushing some laws. There's obviously going to be an investigation into you once the authorities start looking in. And see, financial markets work on trust. If I'm telling you, give me your money, I will invest it in good companies and I'll make sure that you get good returns out of it. Then I need to live up to that trust, right? I need to live up to the fact that, and that's how they did. I mean, they were smart about it. First, they started selling the big stocks, the blue chip stocks, the good quality companies, IBM, right? Disney,
Kodak,
right?
and
Kodak, right? These were the big companies that they were selling. So that trust forms, right? When I tell you today, you would invest in a Reliance Industries, you invest in a HDFC Bank, you invest in a SBI, you invest in a L&T, you invest in a Infosys. Obviously, you'll take me at trust value because I'm telling you good companies. And once I win your trust over, and then I start selling you some of the shadier companies, some of the companies where there is no track record and you don't know what they're doing, then I'm breaking that trust with you, right? And my idea is not to build money for you, right? As Hannah says, as Matthew McConaughey's character says, we don't know whether the market is going to go up, go down, go sideways. We don't know if it's going to make money or not. We just need your money to leave your pocket and come into our pocket, right? So if that is the intention, right, then obviously you're going to come under the view of the law at some point or the other, which he did. So there is absolutely no sympathy with this guy, with the kind of things that he did. He knew what he was doing, and he knew what he was doing was wrong. And ultimately, I don't know whether he paid the right price of it or not, but definitely he paid some price for it.
But here the investor kind of education also come into place, right? Like investors also should like study about the companies which their brokers are being like they suggested.
100%. But let me ask you this. I mean, you put your money in your bank, right? You do it with a trust of the banker or the brand of that bank.
Brand of that bank.
Brand of the bank, tomorrow that bank collapses, right? And somebody says, oh, you should have done your research. You should have known what it was. I mean, end of the day, something is built on trust. Now you drive your car, you're driving that car on the trust that, the brand that I bought it is, they've used quality material and they've built the car properly, that the person on the road next to me is also going to drive properly. So there is some element of trust. But in the financial market, see, that's the thing. In markets, there are two words that dominate every investing decision. It's called greed and fear. This is not a new concept. I mean, everyone you speak in the market will tell you this. Greed and fear, which means that if I get into a stock at 100 rupees, right? And at that time, my expectation is, oh, great. If this stock gives me 15% return in 1 year, I will be happy, right? So if that 100 becomes 115 in a year, I'm happy. What happens is, if that 100 goes to 125, if that 100 goes to 150, if that 100 goes to 200 in 1 year, now you've doubled your money. You were expecting 15%, you got 100%. You should book your profit and get out, right? You expected 15, you got 100. This is where your greed comes. Because you're like, oh, I got 100 more than, or I got 85 more than what I was expecting. Maybe this can go even further. let me not lose my money, right? And then you wait for that stock to go up, and maybe it goes up, maybe it does not. Maybe the market changes and that stock starts falling. From 200 it becomes 150. You're still happy because you invested 100, you're making 150. But when it goes from 150 to 85, or when it goes from 150 to 50, then what happens to you, right? The other thing of this is when the market starts to fall, you're getting good companies at a cheap price,
Yeah.
right? You wanted to buy HDFC Bank at 100, but you're like, no, it's a little too expensive. Maybe when it comes to 80, I will buy it. Market starts to fall, HDFC Bank goes from 100 to 80, good time for you to buy. But you're like, no, this market is falling, maybe it will fall more. Let me not invest right now. I'll buy at 80, and what if it goes to 50 and I don't get to, and I lose my money also. It goes from 80, let's say it goes to 70, and I'm like, nahi, abhi thoda aur niche aana to thoda aur niche jana do. And when it comes to 70, from there it bounces back and then straight away goes to 200, and you didn't get a chance to invest. And then I'm like, oh, it was there, it was so sasta, I should have bought money, right? So when market is going up, greed is dominating your sentiment. You're like, oh, let it go a little more before I book my profit. I'll get even more price. My stock will go even higher. And when the market is going down, you don't want to invest your money in it because you're like, oh, let it go a little more down. Let it go a little, let it fall a little further, and then I'll invest my money. So this is that greed and fear, the two sentiments that kind of dominate your investing decision. So Jordan Belfort took advantage of this, right? He took advantage of people's greed of getting rich quick, of building that expectations. That first talk that he pitches when he goes to the interview at Investor Center, and he says Aerotine Industries, which is two guys doing something in their garage that nobody knows about. And the way he sells it to that guy on the line, everyone's looking around him, so impressed with the words he used and the languages used, and cutting edge radar technology, and next step of innovation, and very soon they'll get big government contracts. So he says all the right things, and he tells that guy that it's at 6 cents right now, and it'll go to $6 or whatever. He'll make 100% gain or 100 times gains on it. And that guy's like, okay, I'll do it straight away. And that's how it happens, right? So it's that greed, it's that get rich quick, it's that I'm smarter than the other, right? That is the mentality that you need to exploit, and that this guy exploited perfectly. I mean, he was a brilliant salesman, he was a brilliant marketing guy. He understood that psychology of his audience perfectly. He hired the right guys, and especially what he used to do in his dealing room as a way of motivation, that I'm building a team of sharks, that these are the guys who will go out, sell their soul, but at least earn that money. That's what he was trying to exploit, and he did it very, very well.
But you said he exploited, like he did shady business over there. You also said that he didn't get his fair share of of jail time or thing. But in the film, at the end, he showed that when he was in the Nevada prison, he was like playing lawn tennis, and he was like, and he said that I was still rich. How did he how can a person do that, like, since everything is being like the assets is being like seized by the government, right? So how can like someone be still rich and like play tennis and all those, like still chill in the jail?
So there are two things that happen in the film, right? One is that he starts putting his money in the Swiss banks when he starts feeling the regulatory pressure. And two, the Swiss banker tells him that you don't need to open the account in your name, right? So in India, we call it Benami properties, right? Or Benami accounts, which is essentially that, you could have a lot of money floating around that is not even in your name, and you could be using that money. So we don't know how much money he had floating around. I mean, whatever was in his name would obviously have been seized, or whatever was in family's name, wife's name, kid's name, parents' name, whatever. But there could be a lot out there in other unrelated accounts, transactions, properties, financial assets that we simply don't know about.
Her aunt in
I mean,
London.
it's that aren't in London, or it's a very common thing in India also. Benami accounts or Benami transactions are a very, very common thing. I mean, a lot of listed companies in India you'll see. You don't need to disclose whenever you buy. When you buy shares of a company in bulk, it is disclosed. But when the shareholding of the company comes out, if you own less than 1% shares in the company via one account, it's not disclosed. Only when your shareholding crosses 1%, it's disclosed. So a lot of people own via multiple accounts a significant stake in the company, but it never comes out publicly because all of that is kept under 1%. A lot of promoters own shares in their company like this. I mean, it's a very common thing that happens. So again, here you're not breaking the law as such because the law says only when it crosses 1% does it need to be disclosed. But you are technically in a gray area because you via multiple accounts, you own less than 1% throughout and end up owning a substantial chunk anyway. So, Benami transactions, Benami properties, when demonetization happened, you saw a lot of the Jandhan accounts suddenly had 2 lakh rupees in them because the government was allowing you to deposit up to 2 lakh, no questions asked. So a lot of Jandhan accounts of people who were earning 5,000, 10,000 a month suddenly had 2 lakh rupees in them because again, somebody's paying them to put money in their account. So a lot of this happens. I mean, I don't think that is the least surprising that he managed to keep some part of his wealth, even though a lot of it was taken away by the government.
But were also like, did any amends happen in the system, in the regulatory board in the US when, like, after this Jordan Belfort incident happened and all those, like, when he went to jail? Like,
I'm not sure. See, this is one movie about one guy, and even like the kind of scams that he did. If you go by purely financial markets, and if you go by purely what happens in the US markets, they weren't that big in nature. Right. I mean, this guy was briefly known after that Forbes article came out, and then possibly a bit more in the 90s, especially when he did that Steve Madden IPO and a couple of other things. But he wasn't like very, very well known. I'm sure he was well known, but not like very, very well known as like one of those big guys or one of the big hustlers until this movie came out.
hmm.
So I'm not too sure now. I could be wrong, but I'm not too sure that there was much that happened after this. Maybe they did something about penny stocks, or especially in the IPO markets. But it's an ongoing process. I mean, these things keep happening. And again, he didn't do anything that the others have not done either. Right? Especially like when he does that Steve Madden IPO. Now, it's a very common thing. Not so much now, and especially not in India anymore because our regulations have tightened a lot around this. But when you bring an IPO, when you're an advisor to an IPO, and the first time those shares are coming to the market and you're selling it to other investors, you hold some shares in your name through some other Benami accounts as well. And once the IPO comes in, you create an artificial demand. So when you create an artificial demand, the price goes up. And when that price goes up, you sell those shares that you're holding in Benami accounts, and you end up, making a lot of money. When they made that 22, $24 million, whatever, in 3 hours. So it's a very common thing. I'm sure they did tighten some of the regulations. I honestly don't know if they did or not. But from when he was operating in the markets to how the markets are now, of course, there's been a lot of regulations that has come in, a lot of tightening that has happened. But like we saw, during 2007, 2008, there's always a way to work around these things.
But he didn't like get some bailout or like pardons or something from the government, like
again, see, that bailout part is when you're too big to fail.
okay.
Right? When if your institution fails, it is going to have a significant impact on other institutions as well when it creates that domino effect. He wasn't that big. I mean, this is one brokerage. He was doing a lot of illegal stuff. He did swindle a lot of people out of their money, but he wasn't that big that he could hurt the markets that much.
But also, have you read the book which is like based on the film?
No, I haven't read the book. I did read that Forbes article through some archive, which they had initially written on him, which called him the Wolf of Wall Street. And it was very interesting. And you know what? You have a lot of people like these, and this is a problem in the markets, and this is a problem especially in India as well. When you have these fanboys who've suddenly seen Scam 1992, and they think, oh, Harshad Mehta was such a brilliant guy, and he got screwed over for doing something that everyone was doing. He was breaking the law. He was doing a scam, right? He was a two-bit hustler, just like so many others, as was Jordan Belfort. Now, because you got caught and somebody else didn't get caught, doesn't mean that what you did wasn't wrong, or doesn't mean that you deserve to get caught for it, right? Or doesn't mean that you did scam a lot of people out of their money, right? So this guy did. I mean, Jordan Belfort did scam a lot of people out of money and did skirt a lot of gray areas, did break the law, did violate trust. So I mean, it's only deserved that he got what he want. And a lot of people, but what happens is we are so attracted to the idea of money, and we are so attracted to the idea of wealth and people making it. And especially when people talk about things like, I need to get my hustle on, or time to start hustling, or earn money via hustling. I mean, Uber's founder, Travis Kalanick, I don't know if I'm pronouncing his second name correctly. He said that, if you want to be successful, you need to have a bit of a hustle. I just think it's the worst thing that you can do, because there itself you're saying that, look, I'm somebody who's not to be trusted, because I'm going to hustle you out of something, whether it's your money, whether it's your trust, whether it's the way I function, I'm going to do that. And as markets grow wealthier and wealthier, and especially in the last year and a half, where we've had this significant jump in the markets and new investors are coming in, you know, earlier you would say that if you beat inflation, so let's say if inflation in India is 5%, and if the stock markets give you a return of 10%, 12%, if you're beating inflation by 2 times, it's a very reasonable return to expect from the markets. But in the last 1 year, if you have, pardon me, in the last 1 year, people have doubled their money, maybe in some cases tripled their money if they've invested correctly. And suddenly your expectation from the market is sky high. And so you're like, if I'm not making this much money, I'm doing something wrong and I need to get my hustle on. That's where you're setting a wrong example for yourself. And as good as this movie is, it kind of sets that example, because a lot of people will not realize that this guy scammed people out of their money, and a lot of, because you don't focus on the people who lost the money. You just focus on how glamorous this guy's life was, and how the kind of debauchery that he used to engage in, and how he used to spend his money, right? The ugly side of what he did, you don't get to see in the movie. So it glamorizes what he did wrong,
Yeah.
right? But it does not show the real picture of the people who lost that kind of money. And that's where the pitfall is. So suddenly, even people who will watch movie like this and who will watch Scam 1992, they'll come out thinking, oh, this guy made money because he was smart and I need to do something like this, without realizing the sort of the pitfalls of it. And I think that, I mean, obviously this is a movie, so they can choose to show what they show. But if you are really looking at it, then you need to realize that what he did was wrong, and he possibly got away very, very lightly in the end with it.
Oh, yeah, exactly. So even you talked about Scam and this film. Both of these films are told from the perspective of the guys who did it wrong. But obviously, since we have showed from the perspective of them, we don't like normally see them as villains. We see them as heroes. That's the main reason.
Precisely.
Exactly, that's the main reason we see them like as the masiha, as a leader, that he come and an underdog from the Wall Street, or from the stock markets over here. So and that's actually the reason we start to love them. And I think when Scam came out just last year, people were telling that, okay, oh wow, Harshad Mehta was a good man. And even just like yesterday, me and my friends were just talking about that, if Harshad Mehta was alive right now, he might have been the richest man in the world. But like his valuation might be like so many millions of billions of dollars. But still, like, he committed a crime. And I think like you summed it up like very perfectly over here. That's the thing. But so like finally, I wanted to ask you first, like, which was your favorite like scene of the in the film?
Right. I think, I mean, again, it kind of glamorizes a lot of things that are wrong with the financial markets. But his first day at a trading floor, and how people talk and how they abuse each other and how they function with each other, and there's like a sole concept that, I'm going after money and this is what it is, and that's all I'm going to do. You have to kind of respect that as well, because these guys aren't pretending to be something that they're not, right? They accept the fact that it's money, and my sole factor in life is to earn money, right? And they're working towards that. So I think that his first day, that whole introduction into the office, and how one of the guys that he's supposed to work for is a stickler, and he is trying to sort of bully him, and then you have Matthew McConaughey's character, who's kind of the other end, and both of them make money. and the way they go about it. I thought that was a really, really good scene. I thought that whole part of how he builds his organization, and suddenly you see his office grows, and you have these cut scenes of the office staff growing. I think that was very powerful in the way that the seductive power of money. That once you show somebody, once you tempt somebody, you give them that hanging carrot. That boss, you go do this, and you will be rewarded handsomely for it. I think that was brilliant. And also that one scene where they have their weekly thing of debauchery, where his way of rewarding people in his office by doing something, and he asks that woman to shave her head, and he'll give her $10,000, and you can see her expressions throughout, right? And the way it changes because she's happy about it because she's going to get $10,000 to essentially shave her head, and then the realization that comes to her through that process while it's on, that how she's humiliating herself publicly, that how she's sort of betraying herself as an individual just for some financial gain, and at the end she gets that $10,000 and she walks away, and that expression on her face, I think that was trying to send out a very powerful message about this whole thing of the seductive charm of money, where you think, if I have money, this is it, it's going to turn my life around. And then when you realize what you have to give up or what you have to become in order to get that money, I think that was very, very moving.
Oh wow! Even for me, my favorite scene was this, like when he talks about the one of the first brokers, like the girl who joins, like initially in his thing, in his company,
Right.
and he talks about like that girl didn't have anything. Like he had a son. Sorry, she had a son that like needs a food, like that needed food, and now she wears an Armani suit, and like that was something that touched my heart. Like I don't know why, but like that really touched my heart. And like how Jordan was that guy, like who also like who also had a heart, and he also benefited his co-workers as well, not just his like close personal guys who were the sharks, but also one of the first people who were like joined him in his like venture. So that's actually for me was one of my favorite scenes as well. So finally, thank you so much for coming to this, like my podcast. Like it's been a real pleasure, like talking to you just about finances and like like stuff in general as well. And nextly, sir, like I want you like to come once again, but not just like talk about finances, your personal favorite like film, not like not about finance, obviously, since you are an expert in finance, but like we'll also talk about a film like which is non-financial and like just film in general as well. So thank you so much for coming, sir.
Definitely. Definitely. Thank you, Sanket. Thank you so much for inviting me. I hope I was able to sort of help viewers out in understanding this movie.
Sure, like it's without a doubt, sir.
Thank you.
Thank you so much, and goodbye, sir.